Okay, good morning, folks, and welcome to Member Stock Chart Request. This is where we review the symbols that our members submit for me to review. But first, let's go over the markets in the pre-market. At current, it is 4:58 Eastern Standard Time in the AM. And once again, we have the Dow Futures 4-hour chart that we are seeing triple-digit bright green futures. Why do we get this? It's so that CNBC can send their cheerleaders on in the pre-market to get the small investor to buy into the euphoria that are the triple-digit futures. They want you to buy at the open so the institutions can sell into your liquidity. Don't fall for it. You saw what happened yesterday and the day before. We rallied into the open and only to reverse to close lower on both the Dow Jones and the S&P 500. Don't let this be you. And so this morning, we wake up to a brand new government shutdown. My response, big deal. The far left would have you believe that the shutdown is going to kill Granny. And the centrist Republicans, that's in air quotes, or moderate Republicans, they'll proclaim that this $320 billion spending bill will help keep our military going. But in reality, it is the fiscal conservatives that are trying to hold this up. And they're doing it for all the right reasons. They're not going to win. But the fact that we're trying to push forward another $320 billion worth of spending and lifting spending caps is just simply insane. Because all we're doing is putting it on a credit card, and it's the exact reason why interest rates are spiking through the roof and causing the stock market correction. And they are only going to make it worse. Now, in the end, they are going to pass this bill with perhaps some revisions, but it will pass. And will there be any cuts to spending whatsoever? Nada. So let's get to the charts. All right, so the Dow Futures, as mentioned, they're up triple digits. We managed to bounce back overnight to recapture a prior support level. Now, this is on thin volume. As we near the close, obviously, volume will pick up here. Now, I think that ultimately, at a bare minimum, we are going to come back down here to retest the prior low, which was seen on Monday. So what everybody should be doing right now is building their shopping list. I personally don't believe that we have seen the lows, and I don't think that last Monday's lows are the lows. So I am in no rush to build positions. And in fact, if I have longs on the table and they are not working, they're getting cut. And we are building cash. So there are two ways to look at this market. You're holding stocks, you're taking losses right now, and you're too proud to take that loss. That's no bueno, man. If you want to stay in this business, you have to build your capital reserves, because there are a lot of other people who don't take the time out to educate themselves, as you're doing right now, and they will sell at the very bottom right when they shouldn't. Build your cash position and spend your time looking for opportunities and those positions that you wanted to buy a couple of weeks ago but were too expensive. Now everything is on sale. The stock market is the only marketplace where people are afraid to buy things that are on sale. Let's get to the Nasdaq Futures. Not much of a bounce back here. We are very close to Monday's lows. Now, might we put in a higher low right here? Maybe. How do we know it's working? How do we know it's confirmed? Only when we get back and above this pivot point here on this potential, with a capital P, potential double bottom setup. We're not there yet. S&P futures, very similar to the Nasdaq futures. Are we putting in a higher low? If we break the support level, in all probability, we're going to retest the support level back here. So I'm not hoping when I should fear. Now, members, over the weekend, we're going to put together a strategy for the coming week on the week ahead commentary coming out on Sunday. And we're going to review all the major averages. We're going to review our positions, a number of which are now short positions, and we're doing well on those positions. And we'll look to add. And for those folks who are not currently a member, you should not be doing your research on the markets intraday. The swings in the market will have you scratching your head because of all the volatility. You need to watch where the markets close to make a determination. And the weekends provide you the best opportunity. Why? It's because you have your weekly charts, which have now closed on Friday afternoon. So not only are you looking at the closing price action on a daily basis, but you're looking at it on a weekly basis, and that gives you a higher level view and a pretty good bird's eye view of the probability of the markets either heading lower the following week, or might they be basing and getting ready for a rally. So I would strongly encourage you, if you're not currently a member, sign up and you'll get the comprehensive The Week Ahead commentary coming out on Sunday, in addition to our market wraps each evening. Let's get to the dollar. Now, the dollar is interesting right now on this 4-hour chart in that this upper band in red here marks the upper band of resistance on a weekly basis. So it's a resistance level that is pretty significant. But you could see here that we are forming a potential head and shoulders setup. Left shoulder, head, right shoulder. We rallied strong yesterday, but then we had a bearish key reversal the following 4-hour period, and we undercut the prior period's lows. So that was some significant selling, and we have yet to re-challenge that prior high. Now, there's two ways of looking at this. Either A, traders are coming to the realization that the dollars really shouldn't be rallying right now. With this market weakness, it's only a matter of time before the Federal Reserve screams uncle and takes these rate hikes off the table. Now, I'm not saying that's the right thing to do, but that's what they're going to do to save the market. Because in Washington, the stock market is the economy. In reality, to us, it's not, but that's how they view it. So get ready for a statement at some point in time that takes rate hikes off the table, and you are going to see the dollar tank. You'll see stocks rip. Will they last? Will that rally last? Not quite sure. A lot of technical damage has been done here. It may be too little, too late. But the dollar will be sacrificed. So here is your upper band of resistance on this 4-hour chart, and we are now breaking down. This is a 5-minute chart. You can see we've given up that lower band of support. We're struggling here on the dollar. Now, if we're seeing a little bit of weakness on the dollar, and I'm by no stretch of the imagination calling a top here, we could be consolidating, getting ready to tackle this upper band of resistance for all I know. So the jury is out. How do we know the dollar is broken? When we close down below this period here with a low at 90.013. In short, if we see an 89 handle on the Dixie, in all probability, we're heading a lot lower. And this dead cat bounce, this counter trend rally will in fact be over. But it's too early to make that call just yet. Gold. Now, gold has had a rough week, no doubt about it, but relative to the stock market and the gold mining names, it's hardly scathed. It was up yesterday versus the stock market and the gold mining names. The divergence, meaning the relative underperformance of the gold stocks relative to the price of gold, is really dramatic. I went over that with members last night. I see opportunity in the gold stocks. I think it was the baby getting thrown out with the bathwater. So I see opportunity in the gold stocks in the coming days. I think ideally what we need is a washout, a capitulation in the gold stocks. And once the Federal Reserve blinks, which they will, it's only a matter of time, you're going to see the dollar tank and you're going to see gold rip. All right, we're going to kick things off first with a chart of U.S. Steel. Now, this wasn't a request by one of our members, but I wanted to go over it because we took a loss here. We opened up a position on this reversal day here on the 6th, and we stopped out yesterday. Why am I telling you about my loss? Why am I not going over my winner, which was Cal-Maine Foods? Because there's more value for you when I go over a loss. The reason is that Nobody on CNBC is going to talk to you about how they kept their loss small. All they want to do is project this image of superiority over everybody else, that they are the best and brightest in the room, when basically they're a bunch of salesmen. They're very well educated, very well dressed, very articulate, but in short, they're salesmen. Have no doubt about it. So they'll never admit that they've made an error, but that's where you learn from. So why did we stop out? And why am I actually bragging about the loss? It's because we stuck by our guns. Our strategy was, we liked the shares at these levels because we booked profits up here at the upper band. Let's go to a weekly chart. We booked profits up here because I didn't want to hope when I should fear, meaning I didn't want to hope with a profit no less that we would rally through resistance, which was serious resistance on a weekly basis. So we booked our profits, and I said, you know what? If we close above this upper band of resistance, I'll buy back in. But the risk reward was not in our favor, especially with the stock market so overbought. Why risk it? And sure enough, we pulled back when we retested the lower band of support. For all I know, this is going to hold. But the strategy was, back to the daily chart, the strategy is that if we do not get a rally up to this upper band of resistance, and we rolled over and took out, I think it was 33.03 was our stop point. I didn't even wait for us to get down there. We just stopped out yesterday because the markets were just so ugly, that bearish key reversal. And we kept our buy small. It was a very small position. And we kept our loss small. Now what we're looking for is a break of support. And we'll look to see whether or not the week's lows at $30.87 holds. Now, while there may be a sting when you take a loss initially, folks, when you see a continuation breakdown and you're in cash now and you stopped out of that trade, all of a sudden that sting turns to wisdom because you had the courage of your convictions to stand by your strategy, take a small loss, and live to play another day. That's what this game is all about. And that's why so many bulls who go through corrections like this never return to the markets, because they've been wiped out. Don't let that be you. And if we break down below this support and close there this week, I'll be clicking my heels saying, you know what? We took a loss. We live to play another day. Our strategy was sound. We'll look to buy back in at a lower price. And frankly, that's where I think that we're going on U.S. Steel. I would not be a buyer here. All right, to the first chart up, I went over this one, I think it was last week, Bison. It was looking really good. But it just goes to show you, stocks that are displaying relative strength will eventually succumb to the selling. And Bison, right now, at current, we are trading down below this lower band of support. If we close below this lower band of support and dotted blue line, in all probability, we're coming all the way back down to $26 per share. Why? Because this would have been a breakout point failure or a bull trap. And we know from past experience that when you get a failed breakout, in all probability, you'll retest the prior low, and there's a very good chance that it breaks. So watch for a close at the lows of the week. If you get that, me personally, I would stop out of the trade. If it rallies back and holds support, great. But if it closes down below key support, brother, look out below. Chipotle Mexican Grill, what can you say here? This is a stock that has a lot of issues, technically anyway. I'm not a fundamental guy, but I could read the headlines, and their headline risk is horrible. Everybody can relate to their problems. And on a technical basis, if we break down below 263 and close there, we're going a lot lower, monthly chart. The next support level, if we break down below, key support here is at 233.82. Now at current, we remain in a massive bull flag formation, but that formation is at current ready to break. And if you take a look here, we have a massive head and shoulders setup, left shoulder, head, right shoulder. Let's throw our neckline up here because it's not pretty. Here you have it. We broke down below the neckline back in July. Now, if by chance we manage to recapture the 300 level by the end of the month, well then, I'd be a buyer of Chipotle Mexican Grill. I'm an opportunist. I'm a speculator. We have no dog in this fight, no emotion whatsoever. We're just going by the charts. And right now, we're seeing shares under a lot of pressure. And if this support level breaks, we're coming down here to 233.82. Wait for strength or wait for support before you enter this position. Baidu. I warned about this stock a few days ago. We had a higher low. 225.50 was our line in the sand because we had topped out at 274.97, pulled back, formed a base, and we rallied. But we put in a lower high. The fact that we closed down below 225.50, that is a confirmation breakdown. To keep this simple, what this all means is that the path of least resistance has now changed from up to now down. So rallies will be sold. And the Chinese markets are under a dramatic amount of pressure right now, along with the U.S. markets. So don't seek comfort in the fact that this is an emerging market play. They are under a dramatic amount of pressure over there. Have no doubt about it. Facebook. I have been very skeptical about Facebook. It took a long time for them to attempt to rally out of this breakout. It was very lackluster. We had broken down on the stochastics, and I got ridiculed for this because I identified the fact that while we were breaking out on price, your stochastics were breaking down below this lower band of support, and that the RSI was not confirming the new highs. In fact, it was making lower highs. Now look at this. This is what happens when you ignore the signals by the market. I hear so many times that the market is corrupt, it's manipulated, we can't make money. You can't make money in this market if you're not watching the charts. It's the equalizer. Now, if we close down the week where we are right now or worse, which is marked by this green lower band of support, we're coming a lot lower. In all probability, we'll come down to 144.56, if not lower. In short, folks, I think we're retracing the entire move in the markets all the way back down to the September highs. Look at this. The market was sending us signals, even on Ultimate Oscillator. All the indicators were implying that this breakout was not for real. You couldn't short it based simply upon the indicators, but the fact that we're now breaking down below support levels, you can now most certainly act on those indicators. The path of least resistance is soon to be changing to the downside for Facebook, absent a life preserver from the Federal Reserve. Apache. Energy is under tremendous amount of pressure. Oil inventories rose. That is not good for Apache. I have little doubt that we're going to retest the support level. Volume has been high. If it breaks, we're coming down here to $31 per share. If that breaks, I don't even want to talk about how far this is going lower. Let's go to a monthly chart. Jesus Christ. We could come all the way down to the teens. There's a huge air pocket in here, a vacuum of support. There may be a defense of a prior high at 27.37, but there's a huge air pocket here. So that if Apache breaks, we're going a lot lower. So honestly, Apache is on our short watch list. And note, as I spoke about earlier with Baidu, note this is a classic case of when the market sends you a signal and that the path of least resistance has changed. We peaked out in May of 2008 after a long bull run, which began back in 1999. We pulled back, found a support level, rallied, we put in a lower high. That floor had been broken back here, and now every time we try to recapture it, we fail. So now what the markets are telling us is that, okay, the odds of you making money to the short side are actually greater than what they are to the long side. So if you're not comfortable being short, turn your monitor upside down. But the probability of us making lower lows here, especially if oil continues lower, is very high. The TZA. We have a clean breakout on the TZA. This puts you short of the small caps. It's on our watch list. Volume outstanding this week. Note how I'm using a weekly chart. Why? I want to get the macro view, the higher level view of how these shares are trading and where there might be resistance. And we have resistance right up at 1503. So we closed out at 1389. So from a risk to reward perspective, would I buy the shares here? Not where we closed yesterday, because I don't have enough profit potential between where I buy and where there is resistance. I would buy it on a close above $15 per share, because I know if we hold that support level, well, then I have my next resistance level at 1857. So that gives me a 3.5 point spread to profit from. And I know that if we close back down below 1503, I could just stop out of my trade with a small loss. So it's all coming down to our risk reward recognition abilities at this point in time. So right now I'm wait and see on the TZA. Might I buy a quick pullback on the TZA? I would consider it, but I would keep that position small. So members, more to come as we're building on our short positions. And we'll also be discussing some really great ETFs that I want to look to put on as investment vehicles for the longer term over the weekend. Everybody have a profitable trading day and a great weekend. Keep those stops tight. I shared with you my loss on U.S. Steel, and there's nothing, absolutely nothing to be ashamed about if you're protecting your capital reserves. You're just doing your job, so don't let it kill you. A few days after you stop out and you see the shares down lower, you'll be patting yourself on the back for having the wisdom to stand by the courage of your conviction. That's it, folks. Be well.